we had this massive supply shock. It made an enormous difference. If you go to now to 2028, there's going to be a supply shock, and I use the word supply shock in air quotes, of going from 450 Bitcoin to 225 Bitcoin. Now, perhaps the price of Bitcoin will be a lot higher, but still, we're talking 200 Bitcoin per day. This is nowhere near as much as it was, say, in 2016. At this point, 95% of the Bitcoin has been mined, and I think the impact of this supply shock of halving will not be as big.
DotKrueger tells about the history of blue market, some pros and cons happening in blue market. The amount of Bitcoin held on exchanges has dropped to around 2.58 million BTC, according to data from Glassnode, as the price of the asset lingers around the $62,300 mark. Bitcoin exchange reserves refer to the total amount of BTC held in wallets controlled by cryptocurrency exchanges. Currently, this metric is sitting at the lowest level since 2018, despite the price of Bitcoin increasing more than 100% year-to-date. Pseudonymous crypto analyst, the DeFi investor, highlighted that as Bitcoin's price started to rally higher in February, around $31 billion worth of BTC left exchanges. Most people underestimate how big the demand for Bitcoin is, said the DeFi investor. Falling exchange reserves is typically perceived as a sign of demand because it might imply that a lower number of coins on exchanges signals a lack of intent to sell coins. In the past, this behavior is associated with retail investors shifting to holding for the long term and market participants increasingly turning to cold storage solutions. However, this Bitcoin market cycle has another investor cohort worth watching: institutional investors. U.S.-listed spot Bitcoin exchange-traded funds, ETFs, now hold 4.6% of Bitcoin's supply, worth around $58 billion. On Monday, spot Bitcoin ETFs recorded $235.2 million worth of inflows, with BlackRock and Fidelity leading the charge, with $98.7 million and $103.7 million worth of inflows, respectively. With exchange reserves falling as institutional investors continue to grow their Bitcoin ETF positions, some traders have speculated that a supply shock is imminent.
Everybody in Bitcoin is obsessed with this idea of 4-year cycles. And the 4-year cycle idea is tied very strongly to this halving idea, and really is tied to the following data. So in the first halving, which was November of 2012, we had a bull market start shortly afterwards in January, February of 2013. And the bear market started in November of 2014. So 12 months after the first halving, the bear market started. The second halving started in July of 2016. And the bear market started in November of 2017. So 16 months later. And the third halving started in May of 2020. The bear market started in September of 2021. So again, 16 months later. So we have this phenomena of halvings happening every 4 years, and the bear markets happening every let's call it 12 to 16 months afterwards, right? So I think if you're going to just continue this logic, you would say, well, the fourth halving started in April of 2024, and so the bear market should start, 16 months later. That would put us in sort of August of 2025. Just keeping exactly with that timing.
In this video, DotKrueger discuss about different halving on blue market since 2012 to 2025 BTC price action gave up gains into the October 7th daily close as geopolitical tensions combined with news that China would not inject further stimulus measures. A disappointing outcome for risk assets. BTC/USD briefly dipped below $62,000 ahead of the October 8th Wall Street Open as U.S. stocks futures declined in step, data from Cointelegraph Markets Pro and TradingView shows. despite what it calls near-term downside risks for stocks due to the week's U.S. macro data drops. QCP nonetheless sees conditions improving for crypto sooner rather than later. Gut is telling me these early week crypto pumps might have been a trap, popular trader Blunts told followers in part of a post on X, referring to strong weekend performance for BTC.
We had this massive supply shock. It made an enormous difference. If you go to now to 2028, there's going to be a supply shock, and I use the word supply shock in air quotes, of going from 450 Bitcoin to 225 Bitcoin. Now, perhaps the price of Bitcoin will be a lot higher, but still, we're talking 200 Bitcoin per day. This is nowhere near as much as it was, say, in 2016. At this point, 95% of the Bitcoin has been mined, and I think the impact of the supply shock of halving will not be as big. So it's just not clear that the next halving will create another bull market in the same sense. And I think what will create it is much more likely just liquidity and financial adoption by TradFi. And I'm not even sure of that, right? So what I'm trying to say here is that the mechanism of bull market is created by halving, not so clear, right? So that's the halving. Now,
in every situation, Bitcoin is befitted for investors. What are your thoughts about it? Share your comment in comment section. Ensure you like the video. If you like it, do subscribe my channel and turn on notification for more updates. Thanks for watching.